Husband and wife own a house, they do a 1031. The husband says, I'm buying the new house in my name only. Can you do it? No. The taxpayer that sells is the taxpayer that has to buy. Black and white rule. Taxpayer that sells is the taxpayer that has to buy. If I'm doing a sale with John, right, with tenants in common, he owns half the house, I own half the house. And we're selling for $2 million. John's getting $1 million, I'm getting $1 million, so you don't have a mortgage. Can I take my $1 million and do a 1031 into another $1 million property? Yes.
Mm-hmm.
Can John do the same thing?
Yes.
But suppose John says, I just want my money, and I'm gonna pay tax, can he do it? Yes.
Yes.
You can do it. By the way, you can't do that if it's a partnership. So if John and I are filing partnership returns on that rental property, you cannot do this. So there's some, you have additional steps. We call this a drop and swap. But can I do a 1031 and John not do a 1031? Yes. So can I buy the property with somebody else? Let's say I have $1 million and there's another house on the market for $1 million, and Jamie and I are gonna buy the new one together because I'm tired of John, I only wanna do with Jamie now. Can I buy a property for $1 million with Jamie?
Yes.
But I'm gonna have a problem because I have a target purchase price of $1 million. If I buy the property with Jamie and we're 50% owners, I only reinvested $500,000. So you gotta be careful because I, as the taxpayer, has to go right. Could I buy the property with Jamie and give Jamie 1% tenancy and common interest and I get 99%? Yes.
Mm-hmm.
As long as my percentage ownership matches what my sale price is, I can, but you can't add kids, you can't add people. So to make my example very simple, I'm doing a 1031, I'm selling for $1 million, I want to buy a rental property in Florida, but I want to put my daughter on the deed.
No.
Can I do it?
No.
I can, but not if I'm paying just $1 million, because the $1 million has to be allocated to me. But if I buy a property, make it simple, for $2 million, I could buy half, and my daughter would half. Right? But my percentage has to match what I'm buying.
And your percentage has to
Correct.
remain an investment.
Correct. So if I bought a property for $1.5 million, I would have to own 67%. My daughter would own, she'd own $500,000 worth. Can I give the money to my daughter? Yes.
Mhm.
Can I lend it to my daughter? Yes. It doesn't matter. But I need to buy a property for $1 million. It's that simple. I also want to talk to you about LLCs. So I just said to you that if I sell a property, I have to buy the new property. Let's say I own the property in a corporation, MTO tax company, and I sell my office building and buy another building. I have to buy an MTO tax. The seller has to be the buyer, always. The seller has to be the buyer. There's one exception. If I sell the property in my name, I can buy the new property in an LLC, single member LLC, that's what SM LLC is, single member LLC. I could buy in a single member LLC, which is wholly owned by me. So the government basically treats that, technically they say it's a disregarded entity, what the government's basically saying is if you buy a property or you do anything in an LLC and you're the only owner, that LLC doesn't exist for tax purposes, it's still you. So if I bought two different properties for my exchange, I could put one in one LLC, which is probably what I want to do. I'm going to put the other one in another LLC. As long as I own the two LLCs, there's no problem. So people use single member LLCs all the time in 1031 because they want to buy the replacement properties and entities. They don't want to put them in their name. Can we do it? The answer is yes. Right? The next thing I have on this list is the reverse exchange. This happens all the time. Somebody finds a piece of property they want to buy. Great opportunity. It's in Florida. It's in Nebraska. I hear stories all the time. I don't ask a lot of questions about this stuff because my objective is to get the client out of the office. So, I don't like talking to these people, I want them out. So I don't encourage conversation. Like I don't say, how are your kids? No. How was your vacation last year? Because it's just another 20 minutes of torture, right? So you know I'm being slightly sarcastic, but I never encourage conversation as opposed to what you do. You encourage conversation because you need to bond with people. I don't need to bond with anybody. I just need to give them good advice and get them out of the office. So somebody says to me, I'm buying a property, I found a great deal in the world. I'm not going to ask them, how do you know it's a great deal? Did you look at it carefully? I don't ask those questions. You tell me you want to buy something, God bless you. Go ahead and buy it. But they got to close in 3 weeks. Or they're going to lose the deal. All the time I get this. I got to close Friday. Right? I got and buy this property. Can you do a 1031 transaction where you close now and then sell your property at a later date? The answer is yes. We call this a reverse exchange. It's where you buy first and you sell second. It's a little complicated, and technically it's very difficult, but we do it all the time. But think about it. If you haven't sold your property yet and you're buying a property for $1 million, where's the $1 million going to come from? You got to have $1 million to close on Friday, right? So that's the first thing. Like, that doesn't occur to people. Like, where's the money coming from, right? If you got the $1 million in cash sitting someplace, yeah, you close on $1 million, you sell your property, you get the $1 million back, right? But you have to have the money. But in the commercial arena, people do this all the time because they're being forced to close and they get financing. Can you, when you buy the $1 million property, can you get a mortgage of $800 now and just put up $200 cash? The answer is yes. But this is the problem. If you're buying a residential property, and so the way that this works, by the way, it's a parking arrangement. The new property is purchased in a single member LLC, which the qualified intermediary owns. We technically own it. So we're buying it for you using your money and your loan. And then when you sell your property, then you buy in a regular forward exchange the property that you parked with us. So it's really a forward exchange with a parking arrangement, right? So the way that it works is, if you're doing this in a residential situation and you're going to get a mortgage of $800,000 and you're going to Citibank or Bank of America, you're never going to get the financing because Bank of America is going to sell that mortgage on the secondary market, and they're not going to understand that you're doing a 1031 and you're buying this property in a single purpose entity for purposes of facilitating a reverse 1031 exchange. They're going to go, what? We don't know what you're doing. And by the way, you're representing to us that this is your primary personal residence, so you get a lower rate, right? It kind of sabotages that whole thing. So in the residential markets, when you do a reverse exchange and you want to get financing for the new property, I can tell you right now, you're going to have a problem with your lender. They're going to have an issue with this. If it's a commercial property you're buying, you're dealing with a commercial lender, they know, they do it all the time. They have no problem. But if you're doing a residential reverse exchange with a residential property and you're getting mortgage financing, it's a non-starter. It's never going to, the bank will never going to give you money.
Isn't there also another issue because let's say you only have a 30% down payment and you're financing, let's use $1 million again, you finance at 700, but then you do your sale on your commercial property and your mortgage is 300 and you're getting 700 out, you have to use the entire 700.
You're overthinking it.
No?
Remember what I said? A reverse exchange is nothing more than a forward exchange with a
Right.
parking arrangement. I don't know what you just said.
Listen to you.
And I don't really care what you just said. The only thing I'm going to tell you, William.
But you have to use the entire
let me-
cash.
Let me explain
That's what
something.
you're saying.
The only thing I'm telling you is, you're doing a forward exchange.
Right.
When the dust settles, I sold with these numbers, what did I buy and what happened to the money? If the forward exchange works, it's going to work with the reverse exchange. Because what you just started doing was making things very complicated, and you lost me. So, if you're selling for 1.1 and you're buying for $1 million, and you're paying off a mortgage of $350. If you buy the new property, $1 million cash, and I go to this closing, I only wind up with $650. Does it work? Yes. I got $650. I sold for $1 million. I wound up buying for $1 million. If when I bought the new property, I got a mortgage for $800, I only put $200 down.
Yeah.
And now I sold this and wound up with $650. Is there a problem? Yeah, there's a problem.
That's what I meant. That's
Yes. So even though you lost me, right? Now I understand. Keep it simple, stupid. The KISS theory. This has to work
Right.
ultimately with the reverse exchange. But that's right. That would be a problem based upon that situation. Construction exchange. It used to be, I'm selling a property for $1 million. I want to buy a property for $500,000, but I'm going to do $500,000 of improvements on it. Can I use the $1 million cash to do the improvement, to do the construction on the new property? Right? Because I'm only buying for $500,000. Used to be the full $1 million had to